Are you a creator or entrepreneur and you don't know where to get started with filing your taxes? Honestly, that's how I felt when I first started my art business. And that's why in today's episode of the Big Leagues podcast, my co-hosts Alyssa and myself have brought on a CPA who will be sharing their insights on the most common mistakes creators and business owners make when filing their taxes. So, whether you're a new entrepreneur or a seasoned pro, this information you definitely don't want to miss. So, sit back, relax, and welcome to the Big Leagues.
Hey guys, welcome back to the Big Leagues podcast. I am super excited about this episode. We have Jorge Arroyo, a very experienced tax person. If you are a business owner, if you're an entrepreneur, if you're a creative, if you're an influencer, if you're a person that just does transactions and makes money, this is the podcast for you.
Hi guys. Thank you for having me. Very excited to be here.
No problem. So Jorge, me and you believe it or not, most people don't know this, but I also do accounting work, not to the level that you do it. And the first person I thought of to bring out this episode to talk about taxes since it's tax season was yourself. So before we jump into asking some of these general questions that people have as far as just get a better understanding of how taxes work and how they can pretty much prepare themselves for the upcoming tax season, can you just tell people a little bit about yourself?
Absolutely. So as aforementioned, my name is Jorge Arroyo. I have 11 years experience in the field. I spent almost 5 years at the Internal Revenue Service, so the enemy. And from there, I moved on to PricewaterhouseCoopers, which is one of the largest accounting firms in the world. And I spent there close to 4 years, or it could have been a little bit longer, actually. I can't quite remember. And I am currently associated with Kyle Lester CPA PC. I just recently became a CPA, and I am just absolutely thrilled to share this moment here with you guys and be able to share some knowledge with some of your viewers.
No, we appreciate it, especially right now, because I know for a fact you're bogged down with paperwork. So thank you so much for, joining us for this episode. Before we jump into it, I don't want to glaze over that you worked for the IRS. I feel like if that doesn't give you more legitimacy than before, I feel like just having a person on the inside to give some information is a huge deal. So the whole goal of this episode is, we want to talk about some of the most misconceptions that people have when it comes to doing their taxes as a creative. Alyssa, I know you had a few questions. Anything you want to jump in and say?
A few. I have so much questions for you, Jorge. And I'm sure whoever is listening to this podcast has the same amount of questions, because taxes is so important and it's just something that we don't speak about enough until it's too late. Like for me, I had the ride of my life last tax season, right? Because it's just, I'm used to working in corporate. So as long as you just take out the appropriate taxes ahead of time, you get your W-2, it's like you look forward to tax season. When you work full time, it's like, yeah, you're going to get some money back. But as a business owner, that's really not the case. There's a lot to uncover here. So I'm really excited to ask you a few questions.
Perfect. I'm ready to go.
All right, Jorge. So my first question is, what are the most common mistakes new business owners make when it comes to keeping accurate records for tax purposes? I ask that because you are spending, you're making money. You're spending, and then you're making money. And it can get a little bit confusing sometimes. And maybe sometimes you're even sharing accounts with people. I ask that because it's so super important. But how do you keep accurate records of this when you're still kind of learning?
That's a great question, actually. And it's perhaps one of the most important steps in maintaining a successful business. And it all starts with being organized and avoiding, which it goes to what you were saying there, and avoiding commingling of funds. When we talk about commingling of funds, we're talking about mixing personal with business. All right. So we strongly urge our clients to be very diligent in keeping their personal activities separate from their business activities. If the IRS goes in and does an audit to your business, and you have all these personal expenses that you're throwing in there, and it all gets tangled in together. You're in all likelihood not going to be on the fortunate receiving end of an IRS audit. So as always, stay organized, keep your business records with your business and, your personal stuff and your personal stuff. As always, save receipts, bank statements, credit card statements.
And I don't mean to cut you off, Jorge.
Go ahead.
But quick question. So what would be one of the easiest way for them to keep everything separated for people that are like, let's say, other freelance designer, maybe they do have an EIN number. Like, what do you think is one of the best ways to keep that stuff separated?
Well, obviously, you have to set up a bank account for the business. All right.
Okay.
And you run through that. I mean, your business expenses run through your business account. And if you have to make a personal purchase, or if you have any kind of a personal expense, you take a distribution, or you take money out to your personal account, and then you do it through your personal account. But, most importantly, your business expenses have to stay with your business expenses, and your personal with your personal.
Yep. So a follow-up question on that.
Sure.
Right, is a lot of times things overlap, right? So like, for example, I'll give you an example. Getting gas. You drive to the office, right, or to your studio with your car. So how does one, and this could be a little bit too granular, but I just want to see if we could just quickly touch on it because it's common. It's like if it's gas, right, where it's like you do use your car for groceries, but you also use it for studio time or creator time. How do you separate that?
Right. So it's not as simple as just, like you said, basically just being able to do it, because sometimes it mixes, it blends in. And you're not always going to take out your business card to pump the exact amount of gas that you're going to use for
that
business
location.
purpose, of course.
Yeah.
So what we recommend is obviously tracking your business purpose use miles or expenses separately, keeping a log, writing it down. And then at the end, we separate the two. We'll ask, this vehicle that you're using, or what percentage of use, or what are your actual expenses related to the business, and we go from there. Even though, as I said, it's not ideal. You got to try your best to keep them separate, but I understand that sometimes it blends in.
So I actually have a follow up to what Alyssa was saying. So I know there's a lot of apps that they have these days that can pretty much track everything for you, or maybe track to everything from like your bank account or even your credit card. As far as that goes, do you think that's a good idea that people should use that? Is that okay? Or like
anything that can help you stay organized, it's a great tool.
Okay.
And so absolutely, we would encourage anything that would make it easier for us too, because you bring it to your accountant, you bring it to your CPA, and you say, here, these are all my expenses, and we sit there for hours on end, pretty much tearing the whole thing apart, trying to figure out, well, what's business and what's personal, and it'll generate a lot of questions. It generates a lot more work for your CPA. Your CPA will charge you more if it generates more work for them. So, staying organized will help you keep good records, will keep your expenses down, for accounting costs, et cetera, et cetera. So,
and I'm also happy you said that, because I don't want to glaze over what you just said, but just being organized and maybe having somebody do your books or using a program to track everything will save you money in the long run. Because one of the things that people might not know is if you come to the CPA, they're going to charge you hourly for as far as just, giving you advice, or as far as going through your paperwork. So I'm very happy that you brought that up, because I know it happened to me many, many years ago that I had no idea how it worked. And I was in shock when I found out, when I saw the bill, because they spent so much hours just putting my books together. So God bless you for spreading the good word on that.
So what I got from both of you is staying organized and keeping your accounts separate. So one thing that a lot of people would have to do is if they're sharing accounts, I feel like nowadays everybody's like sharing accounts. Of course, like, you're putting your money towards your side of it, but it's best to more or less, especially if it's for the business and you're utilizing it for the business, to separate it.
Yeah. And I also have one more question, because I know a lot of people use like the Cash App and the PayPals and stuff like that.
Yeah.
And if they have like a PayPal like business account, do you think that works as far as keeping things separate?
Well, it can work and it can hurt.
Gotcha.
And I'll expand on that a little bit. If you have a business account, bank account, right, and you start to take transfers from Zelle or take transfers from Venmo or any other of those applications. If you get audited, the IRS will request those records, even though they could be personal. They could request them and they could see them. And so it could hurt. It could actually hurt you. So as I mentioned before, you definitely want to try and keep that as separated as possible.
Right. And I'm happy that you said that, because I forgot until you said it, was that if you do get audited, whatever, as far as transactions from Venmo, Cash App, they want to see everything. So if everything is all in the business account, that is the only information that they'll have access to.
Correct.
But
Absolutely.
if you have everything intermingled, you should open yourself up to more punishment, right?
Absolutely.
That's good to know. All right, Jorge, I got my second question for you. So how can new business owners stay informed about the tax laws that apply to their businesses?
So in this day and age, everything we want access to information-wise is on the World Wide Web. You just go on Google, you Google it, you'll get your answer. But the key to that is knowing what you're looking for. So if you don't know what you're looking for, you're not going to find it. No matter how many tools you have available to you to look for this information. So there are websites like the IRS and some other educational sites that provide either updates to tax code or to the IRC. So you can always look those up. However, this is one of those that you sort of have to have prior knowledge to know what you're looking for, and we would always recommend that you consult with your CPA first, as far as, if you have a doubt on something or if there's something that maybe could potentially benefit you. We always hear commercials on the radio. We always hear or we see commercials on TV and stuff where they'll mention some abstract thing, like the new thing on the radio related to the payroll recovery and the credit that the government is offering. And, it's one of those things where you may not know what you're looking for, but just suggesting it to your CPA, and he should be able to guide you in the right direction or tell you what needs to be done or whether you qualify or not, et cetera, et cetera.
And you know what? And when you said that, something just hit me. One of the questions I used to always hear the most is, when do I know it's time for me to find a CPA? Me personally, what I used to tell people is, treat this like a car, and I will explain. So if you're a person that has a car, right, and you need to change your oil, and you've never changed your oil before in your life, you should bring it to a mechanic, right? I think it's crazy that you've never done any maintenance on your car, then all of a sudden you're trying to do it. Of course it's going to go wrong. That's what I tell people as far as taxes. If you've never done it before, you should go to a person. But people have asked this question all the time, so I'd love to hear from your standpoint. When should they start reaching out to a professional to help do their taxes?
The simple answer is, if you have to file your tax return and you are given your forms by your employer or whomever, and you're looking at that form and you don't know where that form goes, you need to go to a professional. Right. I mean, that is actually the simple answer. When it comes to businesses, even more so than that, because there are additional requirements that go along with that. It could be payroll taxes. It could be sales tax. So there could be state requirements. There could be, if you have employees, you could be looking into certain workers' comp related issues. So in a nutshell, if you're a business owner and this is going to be your livelihood, and to touch a little bit on your car analogy, if your car is your only mode of transportation and is what gets you from point A to point B, you got to treat it well. So if your business is your, the way you make a living, then you got to take care of it. And not knowing what to file, how to file, not keeping proper accounting records, I mean, that's a recipe for failure. And I think, I see a lot of people that sometimes either they maybe feel like they don't want to spend the money, or maybe they feel like they can handle it themselves with having no experience, and it ends up being a disaster. So,
oh man, I'm looking at you, Alyssa.
Yeah, heard you loud and clear, Jorge. Heard you loud and clear. So I actually have a question. And this is very important because I was in this position, and God bless Anderson and God bless you. Okay. But how do you know where to start? Like, how do you find a reputable CPA, and what do you look out for? Right? Because you can go on the World Wide Web, like you were saying, Google, and just type in like CPA. But realistically, like, what are some things somebody should be looking for when trying to find a CPA, or how would you go about trying to find one?
You know, today's world, we have Google reviews and all kinds of things that are posted online that basically give you some form of information on the person, which may be accurate or it may not be accurate. What I recommend is for any individual who's looking for a CPA, go online and find some names and speak to them. You can call them. If they're charging you just to speak to them on the spot, that probably should not be the person you should be speaking to.
Oh, wow.
Someone should not be charging you just to give you a generalized conversation about what you need, okay? Which in our case, we never charge for a general consultation. Somebody will come to us, we speak to them, we get a general sense of what they need. And if it's beyond that point, then we'll look further. But to basically get them squared away, for example, if you call someone and you say to them, listen, I'm starting a business, I don't know where to start. We'll have some general questions. What type of business? You know, are you going to have employees? Blah, 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 blah. We'll ask all these questions. And then from there, we'll form a general opinion and we'll tell them, listen, this is what you need to do. You need to, maybe organize or set up a corporation and do this and do that and that. And we give them a general sense. And a lot of times, most reasonable people will say, well, that's a lot of things that I need to do and I don't know how to do them. So I need to hire a professional. Some other people will say, well, I got everything I need. I'm just going to do it. And, God bless and good luck. So that's pretty much a simple answer.
And before we jump off this topic, just to give people like a general idea how much just sitting down just to get their taxes done. Can you give a ballpark? By the way, we're in New York, so New York prices are going to be high by itself. I just want to throw that out there. But as far as a person just trying to get their business taxes done, let's say an LLC, what would you say like the average price?
Well, that's
just like a simple, by the way, just a simple.
It really depends.
Lowest.
Yeah, it's a hard question to answer. It really depends on the volume within the business. It depends on what's going on.
You can give a range, by the way. It's okay. You don't have to give like an exact price. So you could say,
I would say the average price for a simple, and when we talk about simple, maybe no employees to one employee, maybe not a significant amount of volume accounting wise, nothing that an accountant or CPA has to take a bunch of books and dissect them, meaning they provide clean books and it's just a matter of doing the necessary filings with the IRS and the state. I would say the average price is around $900. I would say.
Yeah. No, that sounds right to me. I know. Let's that's a face of shock, but that's what it costs to do business. That's what they're saying.
I understand that now, right? I definitely do understand that now. But in the early stages, when you're starting out and you don't even know your left from your right, it's all very new. It's all very new. So as you go over like what needs to get done, the books, right, and making sure everything is organized, and especially if you're not organized, Jesus. It makes a lot of sense. And this stuff is just super important. And especially if you're in the US, like this is just what happens. This is what needs to happen.
So I'd like to add to that. If you're a particularly unorganized person,
it's a wrap.
Would you rather this is a question from me to you guys.
Right.
Would you rather pay someone to help you stay organized, even though it may cost you a little bit of money, but it's going to be right? Or would you rather continue to kick the can down the road and potentially turn into an even bigger mess? Because I think a lot of times people don't see it that way. People are just like, I'll cross that bridge when I get to it. I'll cross that bridge when I get to it. And when you get to the bridge, you realize, oh man, I'm in trouble.
So I'll let you go first. Alyssa, go ahead, go first.
Gladly, because I'm in such like a new business owner perspective. I have such a new business owner perspective, rather. So I would say at this stage, I would prefer someone to assist with organization. And I say that because it's super important to have a clear understanding of where you're at month over month. And that was a challenge that I have. So it's like, I'm thinking that I'm generating this much money and then my books are not clear. And so it's like a mistake at the end of the year. And now that directly impacts my future years, right? And what I forecasted. So I definitely think that, paying for organization and a little bit of help. And with that, maybe some periodic check-ins just to make sure that you're on the right path, that you are on the right, route per se to, up to the point where you need to get your taxes done is super beneficial for new business owners, because I'm telling you, it's the wild, wild west sometimes, especially if you haven't done it before.
Absolutely.
Yeah.
I'd just like to add one more thing to that. The bigger the business is and the more complicated the structure, the more you are in need of someone to guide you through that process. And in some cases,
Totally.
by the way, we have clients that actually have bookkeepers on site daily doing bookkeeping work. And they send that information over to us for us to review and to check and to make sure that it is correct. And so, obviously, we're talking about a much bigger business. It wouldn't really pertain to a smaller, to a small business starting out, but that gives you an idea of how complicated these things can become. And look, everybody's goal, I would presume, when starting out a business is to grow and to be successful. So if you want to get to a place where you're really successful, you're going to want to have someone there to help you. You're going to want to have that because you're going to need it more so than anything.
And more so, can I just add one thing really quickly? And that is knowledge is power, especially as a business owner, because just knowing where your money is coming in, right? Where your money is going is super important. I think, of course, to file taxes is important, but I think just having a clear understanding of your expenses and your revenue, just even on like the most basic level, you need to know how your business is functioning and how your business is operating. So I think, it's just really, really important on so many different levels.
Yeah, no, I agree. And I'll tell you my view on what we're just talking about. Me, personally, I rather pay for the convenience because as a business owner, there's one thing that I don't have time to do. It's something that I'm not really good at. Now, I'm a little different than most people because I have a background in accounting, but I remember, I think it was like 3 or 4 years ago, I sat down to do my books and I was 3 days in and I was just like, this can never happen again. I will pay top dollar to make sure that everything is organized. And the funny thing is when I talk to people and I say like, oh, okay, hey, so you want to do business taxes? No problem. So who did your book? They're like, oh, I did. And I go, oh, it's wrong. I just know immediately it's wrong because there's just no, like I said, I went to school for business. I didn't go to school for accounting, but I know enough to know that I'm not doing it the correct way. I need to give it to the professionals to do it. You know what I mean? And especially one thing that we did not talk about is how much that you can be hit up for doing things wrong as far as penalties and fees. And that stuff adds up. Like God forbid, you file your business taxes late. Like some people might not even know that when do business taxes go out? They do not go out April 15th. What's the date for business taxes? It's
March
like
15th. March 15th.
Oh my God.
March
What
15th.
is it?
March 15th.
March 15th?
Exactly.
Well,
See,
thank you.
Exclusive of any extensions, but yeah.
exactly.
March 15th, guys. March 15th.
Just
Like
that
I
by
said,
itself.
The C Corp has a different filing date, but for most smaller business, it'll be March 15th.
Right, in the general terms. But all right, so I'm happy that we're doing this, and I think we're ready for the next question.
All right, this next question is a big one, especially for me. So what steps should new business owners take to ensure they're setting aside enough money to pay their taxes and that there's just no surprise when they're looking to file? I feel like taxes are just full of surprises. So Jorge, how can we eliminate and plan for the surprise?
So, yeah, this is a fun question because there is no magic crystal ball that we can use to really project. We pretty much can, especially if you have good records, as we mentioned, quarterly, we can do a projection and an estimate and figure it out from there. But in the moment, as you're collecting this money, you have to make sure you have enough to cover for, when you have to do your quarterly estimate or pay taxes at the end of the year. What I normally tell my clients, especially newer clients, is that for every net dollar, okay, meaning every dollar they take home, okay, they should put aside 30 cents of that dollar towards taxes. And that shocks a lot of people. And
how many people
it,
fall out their chair when you say that? How many people?
A lot of people, they don't understand that. They can't believe it.
Jorge? Like
Yes.
30%. It's like, this is the money you work so hard to make, and this is what we're
Yes.
going to take. 30%.
So, and I'll tell you, I'll expand a little bit on how I come up with that number. And by the way, the 30% may not cover you. Okay, it depends on how much business you do and how much money you take home. But or it could be too much. If it's too much,
That's
you're
a
not
good
going to
problem.
lose the money. You get
Exactly.
a refund. It's fine.
That's a good issue.
It's fine. But if it's not enough, then it's more of a problem. So the 30% comes from, depending on your structure, your business structure, especially if you're like a single member LLC, or if you're an active member in a partnership, you will have self-employment tax to pay. Okay, and that self-employment tax is 15.3%. So off the top of your net, you're going to pay 15.3%. And we have not even gotten into what you would pay on your income tax, your actual income tax, which that depends on your other income and what tax bracket you land in. Also, you have state taxes to worry about, which obviously we're focusing on here in this conversation more so on a federal level. But
Right.
States have their rules too, and states have their taxes and their credits and their deductions and things, and that's individual to each and every single one of the states. So
I don't want to cut you off, but I know for a fact there's somebody listening to this and they're thinking this. So let me just ask you this question. Why do people have to pay taxes, right? I use myself as an example. I'm an artist. I sell my artwork, right? I don't know. Let's say I make $20,000 at the end of the year. Like what is the reason that I have to either pay, and I know it's broad, that do I have to pay like maybe $5,000 in taxes, or why I have to pay $0 in taxes? Does that make any sense? Like, let's do this. People think they're always supposed to get a refund. So when they hear their friends say, hey, you got $1,000, you got $2,000, but I'm working really hard and I have to pay back.
I understand your question. Yeah.
What is the reason that's sparking,
so
that I have to pay back to the IRS?
Yes. The simple answer to that is, if you're an employee, okay, of a company, meaning you don't have a business for yourself, you could structure it as such, but I guess that might be for another day. Maybe if there's enough likes, we'll have a second part of this video, and we'll expand a little bit more. But basically, if you're an employee to someone and they are withholding taxes on your behalf, okay, that is money that you're not taking home with you. They're withholding it. They're holding it back on your behalf and remitting it to the IRS at whatever rate the withholding table indicates. And if there's a remaining amount, that amount goes back to you because you overpaid on the taxes they were withholding from you. The driver to whether you're going to be overpaid or not is how much money they're withholding. And it's based on this form called W-4 and how many exemptions you put on there and what your living situation is, whether you're married, you're single, you have kids, etc. So what we see a lot of times, and I didn't mean to cut you off there, what we see a lot of times is, and not to get too long-winded, is that single individuals probably get withheld at a higher rate compared to their tax bracket. And that's what the majority of people come back and get this quote-unquote refund also. There are people who get certain tax credits, like the earned income credit, the child tax credit. And when those credits go against your tax, the money that you were getting withheld becomes way too much in excess because the government is basically giving you a credit. And when you get that credit, it comes back in the way of a refund. For a business owner, they don't have that luxury because you as a business owner technically are your own employee, which is why it's called self-employment income tax, etc. And as an employee of your own corporation, you are responsible for, and not to be redundant, being responsible with your taxes. You have to remit the amount, or you have to withhold, or you have to hold back or pay the amount necessary to cover for your taxes.
So what you're saying is, so let's say if I work for Target, Target handles making sure that my taxes get paid. They make sure they send it to the IRS, they send it to the state, they make sure everything's taken care of. But once I move into the new arena and I have my own business, it's my own responsibility
absolutely
to do that. And if I don't, the chances of me owing are going to be a lot higher.
Absolutely.
Or this is probably going to happen.
Absolutely. And that's the most common mistake that we see with new business owners. And it shocks them. They don't understand it. We try to do our best to, when we get someone new and they're setting up their business, we kind of give them a little crash course of what to expect and the things that they can be aware of. Because if you just set up a business, nobody tells you anything. And even if they guide you through setting, like you can go LegalZoom or whatever and set up a business, you know, but you're not getting any kind of guidance. And just because you have that EIN and the articles of organization or articles of incorporation, and you legally have your business, doesn't mean you know what you're doing. It doesn't mean anything. So that's when, you know, it's a very interesting question and common, and we see it all the time, and people get very frustrated. And the sad thing to go along with this is that the person that doesn't have a lot of money and they did not put any money away for taxes, and they spent 100% of the money that came in, meaning they think that 100% of the money that they collect as a business owner is theirs to keep, and then they get that tax bill at the end of the year, they have $0, then you owe the IRS. When you owe the IRS or you owe the state, that's when your problems begin. And so you really want to avoid that and be proactive with this.
Now, I just want to tell Jorge a fun little story that he doesn't know. I think I was telling this before. So not too long ago, right, when I was running the tax business, or I took it over, I got a nice little letter from New York State. And he said to me, like, hey, the way that you're reporting your employees was incorrect. Now, I just got the business. So I'm like, what are they talking about? They said, you said they were private contractors, but as far as looking through the research, they are employees. I'm like, oh, okay. So what does that mean? They said, you were missing paying Social Security and Medicare, and now you have a $30,000 tax bill with a few other things. Now, was I upset? Of course. Did anybody tell me? Absolutely not. Kind of walked into the situation. But the moral of the story is just one little mistake, one thing I did not know cost me $30,000. And trust me, I tried to explain to them, like, hey, I'm just starting out. You know, they sympathize with me. They heard what I had to say. They're like, you know what? I get it. I'm so sorry.
Yeah.
We have a payment plan for you.
Yeah.
Yes.
Yes.
Don't worry. We take credit. You have a credit card? Don't worry. We're going to take care of you. So I thought we'd just share that story as far as the, yes, definitely.
It's
the school of hard knocks.
That's correct. And what I call that, from my IRS days, that's relentless empathy.
Oh, yes.
So
that's what she gave me.
You will just say to them, hey, you know, it really stinks. I'm sorry that you're going through this, and you know, it's really bad. But by the way, if you don't pay, we're going to collect.
Right. Oh, right. Exactly.
That's actually how I will go. That's exactly how I will go.
Yeah. They're like, have you heard of a lien before? Do you know what a lien is?
Yes.
Oh, my goodness. And that's what I was just about to say before. Jorge, I'm really happy that you touched on guidance. And just you and where you work offers the guidance. So it's not just about, okay, here's your LLC or here's your S Corp or whatever you register your business as. This is what to expect in your first year, because it will do a number on you if you're not prepared for it. So I really appreciate that you guys focus on guidance and education.
Okay.
Jorge, I have such an important question for you, simply because we're in the day and age where people share, right? People share rent, people share accounts. So my question for you is, how can new business owners claim a proportion of their home expenses like rent, electricity, and internet as a business expense, especially if they're sharing?
Yeah, so it's a great question. A tricky one also. In this post-pandemic world, where a lot of people were allowed to work from home, it became a very hot topic where, people were just sort of taking advantage of being able to work from home, and they were just deducting 100% of everything, arguing, well, I work from home 100% of the time, so therefore, all of my expenses are because, incurred as, as a way of making a living. That's a misconception. And so basically, okay, if your business is in your home, meaning that is the sole location of your business, you are technically supposed to have a space solely dedicated to do business inside of the home. Okay?
Even for people who live in the city,
Even
that's very difficult.
For anybody.
The IRS don't care. Listen,
That's
they don't
the
care.
general rule.
I know. I feel like, what do you mean? Like, New York City spaces,
By the
everybody.
way, it obviously there's a bunch of exceptions, and which we're not going to get into. But like, if you keep inventory,
Right.
like if you are selling stuff out of your house and you keep inventory, then it gets tricky. Because let's say you use your living room to bring in clients who are going to buy, I don't know, whatever you're selling from your house, and give it to them. But you meet with them in the living room. You're going to argue, well, my living room is technically my office, but let's say you're baking goods and you have inventory in your kitchen, in your pantry.
Yeah, wow, you're right.
So you're going to say, well, my inventory is there and I'm using my kitchen. So the way you're supposed to do it is you take the square footage of the house and you prorate the amount of business you space. And from there, you start prorating the expenses, blah, 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 blah. Now, there are two ways that the IRS allows this, and I'm not going to really get into the detail, but there's a simplified method and the actual expenses method. Most people choose the actual expenses because it's a better deduction. The simplified method it's basically cookie cutter. I'm not going to get into it, and it's a lesser deduction too in a general sense. But, a lot of people have been taking advantage of this and really just going overboard with it. And the key is you have to be able to justify the space that you're using for business only. And if you can't do that, then you really should not take the deduction, because the IRS will definitely crack down on this.
They will find you.
Absolutely.
They will absolutely find you.
So my question for you is, literally right now in a home office, and I do majority of my design work out of here. So what should I bring to you if you're my CPA, just to show like, hey, I have a home office, like what should I give you so I can get the credit?
If you were not keeping your own accounting and you were just giving it like actual expenses to your CPA, there are certain things you could deduct, and it depends. Again, I'm going to sort of use like a broad blanket, and then, I don't want people to just directly quote me on these are the only ones or these are the things.
Yeah.
But
just like a general idea.
You could bring a mortgage statement or rent statement. You can bring certain utilities. You can bring any repair costs related to that specifically to your space. You could bring tax records, like if you pay property taxes.
Okay.
Those are some of the main ones we see. And from that point, we would ask you, well, Andy, how big is your house? And you tell us, well, my house is X number of square feet. We'll say, okay, great. And how big is your office? Well, my office is X number of square feet. And then from there, we'll start to make our calculation. There are certain provisions, which, this is a very dense topic, but
yeah, of course,
depends on whether you itemize or not on your taxes, and it as far as how we calculate the deduction or whatnot. So,
but that's good to know. That's good to know that, because you don't need to. Because let's be for real, that book is thicker than the Bible. So we definitely don't need to go through everything. But it's definitely good to know that bringing in, if you have a house, you could bring your mortgage statement, or if you rent, you could bring in your lease, just to show. And just bring it to you guys, and hopefully you guys will be able to point this person in the right direction.
Absolutely.
One of the things I hear all the time about keeping track of your expenses for a business is mileage. Do you have any tips for anybody as far as how to keep track of their mileage as far as for their business?
Yeah, so there are two ways of looking at this, and it's actually not as simple as I'm going to make it out to be, but I'm going to try to simplify this.
Before I should have worded this a lot better.
Okay.
Let me try this. As far as mileage, like, how does that even affect your tax return? Like, what does mileage do exactly? Can I write the entire thing off? Do I write, like, anywhere that I go because I'm just driving my car, or?
No. So,
Oh, man.
so it works out
Darn.
this way. You
Right.
have a vehicle that is
Mhm.
100% dedicated to business purposes. And
Like an
you
Uber driver?
solely- I'm sorry?
Like an Uber driver?
Like an Uber driver. That's a good example.
Mhm.
Assuming that they have a second vehicle, which I'm going to touch on in a moment. But if you have a vehicle that you solely use for business purposes, and it's your only vehicle for business, meaning you have another vehicle for personal uses, and when you use that vehicle, 100% of the time you use that vehicle is for business purposes, you can deduct either actual expenses or there's a mileage adjustment that the IRS allows you to use, which, you know, I'm not going to get into the calculation on that. Generally speaking, most people use the actual expenses because what you'll spend in gas, what you'll spend in oil changes, what you'll spend in, some of those other costs would be more beneficial to you. And this is one of those where the IRS actually allows you to take the bigger of the deductions that you may get. So good for the IRS to be kind on that regard. But essentially, okay, record keeping, like we mentioned before, really important. If you don't have a second vehicle, meaning if you have one vehicle and that one vehicle you use for both things, you have to keep a tidy record of when you use that vehicle for business purposes, how much you're spending, how many miles you're driving. As we mentioned earlier, there are apps that'll help you track and all of this, but it's very important. And for the nerds out there who are, into tax and want to know a little bit more, Publication 463 on the IRS website will give you a little bit of insight on that. So the people that want to go and, do a little reading, they can go ahead and go on the IRS website and look up Publication 463.
And I know for a fact somebody is screaming this at the computer right now, so I have to ask this question.
Yes.
So, just so we're on the same page, so are you telling me, because let's say I work at CVS, I can expense driving to CVS and then going back home? Is that what you're saying?
And so technically, no. So the IRS maintains, in some cases, that when you drive from your home to that one place of employment, and because you're an employee, you're not allowed to deduct that. And it's
So
far
if I
more
work for
complicated than
somebody,
that.
I cannot
If
use
you-
the mileage.
If you're working for an if you're an employee of someone,
Right.
okay,
Thank you. That's what I
but
meant to say.
you could be a contractor. That's a different rules apply. Technically, you're not their employee, but so it depends on your line of work. It depends on what you do. So it's not as clear cut. But
Gotcha. But so if I get a W-2, that's what I should have said.
I also wanted to mention there are certain rules on leased vehicles that people should take an interest in. If you have a lease, a lot of people have leases. So when you have a lease, the way you deduct or the way you come up with your calculation for the deduction, it includes an extra calculation, which, by the way, like I said, it's all in Publication 463 for those who want to go in there and have some reading. That's right.
It's nighttime reading. All right, you can go to sleep.
Or you could just take it to your CPA. They'll know what to do.
Right. In fact, I'm happy you said that because you also brought up another point I want to talk about. So I know, Alyssa, you were talking about this the other day, that you travel as far as to networking events.
Yes, all the time.
As far as using Uber, like where does that fall into the...
That
as
may
expenses?
be deductible.
Okay.
Yes, it may be deductible as expenses on your business return. Obviously, we have to understand the purpose of this, of why you're using Uber and what alternatives you may have had to this transportation.
I
but
think I use networking, and networking is way too broad. But let's say if you're a plumber and God forbid your car broke down and you have to use the Uber to go to... Okay.
Deductible. Yes.
Gotcha.
Mhm.
Okay. Hey, that's good to know.
Very interesting. And, the exciting part about this all is that we're still at the top of the year. So it's really good that we're getting all this information so we can begin implementing all the things that you're telling us to for the new year. So I know I will. Like, as soon as we hop off this, I might just go back and look at everywhere I traveled and do the calculations, because I'm always traveling for business.
It's funny you mentioned that. A lot of times we get clients, 'cause you mentioned the new year, and it just kind of sparked in my brain that sometimes we'll have clients that want to open up a new business, or they're thinking about shutting a business and doing something else. And we usually try to tell them, wait till the end of the year and then starting the new year fresh, rather than having records that are halfway through the year or 3 months. And obviously, sometimes it's unavoidable. Sometimes you got to close when you got to close, or you got to open when you got to open. But if you have the ability, because I think it helps with the organization. If you start from the beginning of the year, it really helps you get in the flow, and it allows for us to maintain, or to help maintain those records in a more organized manner. So, it's interesting you mentioned that.
And before we change topics, I do want to bring this up because I'm sure there are creators that watch this that might not do art. They might just, be a content creator, and they might not know this. So, Jorge, I have a friend, right? He goes to amusement parks and he does reviews on them. Like, he shoots video, right? Mm-hmm. The money that he spends to go to these places, the entire thing is just so he could shoot content to come back home. If somebody came to you, they wanted to know, like, hey, is this a possibility of being an expense? Like where does that sit with you?
Yes. So that's not a that's in a typical situation, obviously, as compared to most. I mean, the majority of people are not going to be involved in that line of business. Right. In a general sense, if that is his business, that is the way he does a living, and it is 100% justifiable that he incurs these expenses as a business purpose, especially if he's making a profit off of it.
And as I should say, let's just say this is like a regular YouTuber. Like, you've actually heard of this person. They obviously go places to shoot content and stuff like that. So I just want to throw that out there. So it's not like a person off the street that's kind of sort of doing it, but this person's like established.
Yeah. Could that person be audited by the IRS and they'll have to answer questions? Yes. I think in a nutshell, they would end up on the right side of an audit, because they'll be able to justify it. They'll be able to clearly show, hey, I'm going to this amusement park because I do this video, and this video is how I make a living. So it would I would say it would definitely be allowed expenses. It's kind of an interesting question, and a kind of a little bit off in terms of from the norm.
Of course, but, and I don't want to ask you a question to try to trip you up or anything.
No,
the reason why I asked is because, like, I do that myself. Like, as you already know, like, I travel all over the place, and the place I go to, they are expenses, and they're for my business.
With this new age of technology, and especially with people having the freedom, especially after the pandemic, and these new career paths that are coming up, that probably were not a thought of 10, 15, 20 years ago. I mean, people were not on YouTube 20 years ago. And I think these things are going to change prospectively how the IRS treats these things. Because there's going to be people that will take advantage, and then the IRS will step in and say, well, you can't do that anymore. You have to do this, and that, or there could be limitations or whatever. So it's interesting that you bring up the question, because I think that this answer could drastically change in 3, 5, 10 years. We could be, the question could be totally different, and the answer could be totally different. So
right, that's true.
We can only answer as of what it is today and how it would work out today.
That is true. Well, it sounds like to me it might be a good idea just to bring the paperwork and ask the question. You never know.
I swear, Jorge, as I'm asking these questions, I am taking so much notes. Like, this is another big question. How can new business owners ensure they're classifying the people who work for them and contractors correctly for tax purposes? And this question is kind of layered, and I would love for you to answer it, because it's like, what's the difference between, an employee versus people who work for you versus a contractor? Like, how do you classify each person, if it's possible, especially if, like, you're an agency and you work with influencers and you work with photographers and, you work with freelancers? Like, again, it's such a layered question, but super curious to know how businesses can, make sure that they're cost
And a very important question, because how these people are treated, whether a contractor or employee, has different tax repercussions, and different insurance repercussions.
Oh, wow.
And like for instance, in New York, where we are, that distinction isn't as clear for workman's comp, which is a big thing. So, and then we're not really going to talk too much about workers' comp and all that, but essentially, okay, there are specific rules the IRS puts out as far as whether someone should be considered your employee or if they should still be considered or treated as a contractor.
Okay.
And as we, just to kind of quickly go over it, a contractor, you generally give a 1099 to, send them on their way. They'll be responsible for paying their taxes, which they'll report on their individual income tax return. If they are an employee, the employer is responsible for 1/2 of, the FICA, Medicare, Social Security. So that is one of the main distinctions. When you hire someone as the employee, you must cover that for them. You must cover half. And that's an expense to the company. So you get to take that expense, but you are required to do it. So essentially, it's dense as far as the classification. But if you control their schedule, if they come to work for you and you are controlling them, meaning you're telling them when to show up, what to do, when to leave, the general rule is that is your employee. That's not just a contractor. A contractor is someone that basically you request something of them and they're going to do something for you, but it's basically on their terms, So you don't really have much say on those things. The easiest way, as I mentioned this before, if you're not sure, obviously you speak to your CPA, tell them the situation, tell them what's going on, and they should be able to tell you right away, look, this is what's going on, or this is not what's going on. They should be able to guide you in the right direction. But, if someone, for example, if someone's working as your agent, if you have a driver and they are your agent, that's technically your employee, even if you don't really have much say on their schedule. And obviously we're not going to, I should say, I really don't want to expand on what's an agent and what's not an agent.
Right,
and
of course.
That's for another day, but very important topic. And I'm sure you guys probably have other questions regarding that.
Yeah, no, and I know Alyssa's going through her own motions right now, is finally getting all her paperwork together. But a very common question I hear, and you might be able to have a good answer for this, is so as a new business owner, is there advantage to each one? Is there advantage to having somebody as, like, hiring somebody that you give them a W-2 or hiring a contractor? Is there like any advice you would give somebody as far as starting out, as far as trying to hire a person?
Well, it's I don't know if it's a matter of an advantage. It's just a matter of what you need,
like preference,
and what you need in your business. If you need someone that is going to work for you, and you need them in the office from 9 to 5 for doing whatever for you, from a set schedule, and they have to be there every day, and you have to be able to tell them what they need to do for the day, and you're going to basically control what they're doing, then you need an employee. And that means you're going to have to pay the payroll taxes, but your business needs that. You need it as a business owner. You need this person to do this for you. So they're going to have to be your employee. If you're a little bit more lenient as far as, well, I need X, Y, Z done, but I don't really need to tell them when to do it, how to do it. And as long as it gets done and they're responsible and responsive to me, then maybe in that case you say, well, I'll just, I don't really need an employee. I can just give them a 1099. They can be my contractor and call it a day. So I think it's more driven based on need than anything else.
No.
And do you have to is it the same thing between like a part-time employee and a full-time employee? Like, is it the same type of paperwork, or is that another layer?
Same requirement. You still have to pay payroll taxes. You still have to report quarterly payroll taxes. You still have to give them a W-2. You have to do the remittances to the IRS and the state as required. So now there's you know, the simplicity in the contractor is that you just give them a 1099. That's it.
Right.
And
you know, you're responsible to pay for their Social Security, FICA, Medicare. You don't have to. They'll pay for it themselves.
My bad, Jorge. I didn't mean to cut you off.
No,
and I also wanted to take this topic and flip it, like as if I was the freelancer. Oh, we're talking money here, so let me put on my money hat real quick.
Okay.
Here we go. Here we go.
All right. So
Good.
let's say I'm a graphic designer and I'm a contractor. I'm getting 1099s, right?
Yes.
Does it make sense? Like, should I open my own business and get an EIN number, right? Or should I just let it be on my own tax return? So I guess my question is there a benefit for me to opening an LLC? Because I'm a graphic designer. I've been doing it for a few years. I'll let you have the floor.
If you open an LLC and you're the sole member in that LLC, there's no difference. You're still going to be treated as a disregarded entity. It goes to the Schedule C. So there will really be a difference for tax purposes. If you open up a corporation, like an S Corp, not a C Corp, an S Corp, it's a different story. There will be a difference in how you are treating this. However, and this is very important, and this is a major misconception that people make, in that a lot of times they'll say, well, you know, I'll just open up an S corporation and I won't pay the payroll taxes. No.
There's no running. What you're saying? There's no running. All right.
That is completely improper. You know, you cannot avoid the payroll taxes. Okay. The S corporation gives you the ability, certain freedoms, which I'm not going to get into detail, where you don't avoid payroll taxes, but you might be able to sort of lessen the blow, if you will. But you are not allowed to avoid those payroll taxes. And so, in a nutshell, it doesn't matter. If you're getting that 1099, you need to think, let's say you get a 1099 for 10 grand. Remember the 30-cent rule? $3,000 are going to Uncle Sam, you know? So treat a 1099, and this is really important, treat a 1099 the same way you would treat a business income, the same exact way, because there's no difference. When you are an independent contractor, you are considered self-employed. And a person who's self-employed is no different than a business owner.
No, that's very important, because especially in today's age where people are getting money from different kind of ways, they could be, I don't know, like let's say I help Alyssa out, do design for her, or do a design for somebody down the road, and all of a sudden I get some paperwork. I'm just like, hey, what's this? What do I do with this? How come it's not a W-2? What do you mean I have to pay self-employment and these taxes and stuff like that? So I think I'm happy that we brought this up, because I'm sure there's a lot of people that are going to learn the hard way on, like, if you don't do things the right way, that you might have to pay. But I feel like if we bring it to attention now, at least they'll know for the future. So, all right, Jorge. So I'm very excited. We're providing so much value. And I have one question that I know for a fact people want to know. So what are the common errors that new business owners make when it comes to filing their taxes on time? And the floor is yours.
It's a really good question. What are the main misconceptions that we see from new business owners? Is they'll open up a business, and for whatever reason, maybe, they'll organize, they'll get their EIN, they open up the bank account, but they don't.
I don't mean to cut you off, Jorge.
Yes.
What's the EIN?
Okay, that's the employee identification number. That's like your social security number for your business.
Thank you.
So when they establish this formal business, and then for whatever reason they may not partake in it, there may not be any activity at all.
Do they have to file if they don't do anything with their business? Do they have to file?
They must file. Even if it's a
Really?
zero
Why is
return.
that?
Even if it's a business return. Because
So if you make $0, you still have to file?
You must file if it's a business return. If it's an S corporation or if it's a partnership return, you must file it in zeros. Otherwise, penalties will apply.
What?
That is correct.
So I just want, for the people in the back, even if you made $0, you still have to file. If you don't,
the
they will
IRS
hit you with
wants
penalties.
to know for fact that you made $0. There's no
Yeah.
hiding. What I'm getting from this whole thing is no hiding.
The slight exception to the rule is if you're a disregarded entity. If you're a disregarded entity, you don't have to pick it up on a Schedule C if you did nothing. You don't have to report anything because it is understood, and I'm kind of making an assumption. I don't really like to make assumptions, but it is understood that when you file your individual income tax return, there was no activity. So but if it's a partnership, if it's a S corp, obviously if it's a C corp, you must file. It's very important. Otherwise, it'll be, if you exceed the due dates, and if you want to talk about due dates, for a C corporation is due the 15th day of the fourth month from when the fiscal year ends. It could be a calendar year, or it could be a fiscal year. And then for S corporations and partnerships, it is the third month, 15th day, third month. And then if it's a disregarded entity, like an LLC, single member LLC on a Schedule C, which flows to an individual income tax return, obviously it's the same date as the individual income tax return, which is April 15th. So,
so what happens? And I don't mean to cut you off again.
Yeah.
So what if, God forbid, I wait till the last minute to get my paperwork together? It's literally the 14th of March. I bring you the paperwork. Like, what are my options?
You request an extension.
Okay.
Request an extension of time to file. I would say, unless if your tax person is willing and ready to do your return right there on the spot, then so be it. But I would probably recommend, to avoid any mistakes, requesting an extension of time to file at that point in time.
How much more time do I get?
6 months. 6 months.
Oh, 6 months.
6
Okay.
months, yeah.
And just so I know, so let's say, God forbid, I ask for 6 months and something crazy happens and I just don't get it done. Can I just do another extension?
No, there are no more extensions beyond the 6 months.
Oh, so you get one extension.
That's it. One extension, and that's it.
That's good to know.
And now there are
and when I file an extension, right?
Yes.
That's an extension, so I have extra time to pay, right?
no, you do not have extra time to pay, just to file.
Oh. So let's say if I come into you and I have an idea, $1,000, like what happens?
You must pay by April 15th if you're an individual.
Okay,
In an S corporation, you shouldn't have a tax due. And there's very rare cases where you may have a tax due, but you should not have a tax due because it's what's known as a flow-through entity that goes to your individual income tax return. So that liability will go on your individual income tax return. Same thing with a partnership. Same thing with the disregarded entity. So you really shouldn't have. The only business returns that would have a tax due would be like a C corp, a corporate return,
Gotcha.
1120. And that's really the big one. The other two should not really have that. And
so I'll say personal, just to keep it simple. So if I walk into you and with my personal tax return, I owe $1,000 and we do an extension. So what you're saying is the IRS is not going to be understanding, give me more time to pay them.
absolutely not. Yeah,
The interest will still accrue.
interest
I learned that the
interest
hard
and
way.
penalties. Interest and penalties will accrue beyond that point.
I'm like the poster child for learning it the hard way for small businesses and agencies. That is me. Listen, Jorge, I know we have a few minutes left with you, and I just want to see if you can quickly touch on this question. So the difference between an LLC and an S corp. So for me personally, when I started, it was an LLC. That's all I knew. And even with my friends who are business owners, like that's just what it's tossed around. Like just get an LLC. We really don't hear a lot about the other ones, especially like S corp. But now that I'm in business, the S corp was brought up, and I'm still kind of confused. So can you quickly touch on, if you can, what that difference is, the LLC versus an S corp?
Yeah, so it's a great question, and I'm not sure we're gonna have all the time in the world to go through every nitty gritty, but I'll boil it down or simplify
generally.
it as much as I can. Whether you establish an LLC or a corporation, being an S corp or a C corp, it really just depends on your needs and who you are as a business, and also in some cases, there are certain rules that apply that will keep you from being able to open up a certain type of entity. For example, the easiest one that comes to mind is you cannot open an S corp if you have at least one shareholder that's not a U.S. citizen. So in that case, you can default to one or two other options, an LLC or a C Corp. So most people open up an LLC because they're
Right.
going at it alone. It's just one of them. It's just one person. And it separates the liability from you, the individual, to the corporation, so people don't come after your assets. And basically, it simplifies the amount of paperwork. When you're a single member LLC, you only have to file one tax return, or two tax returns. Your federal and your state. You don't have to really file payroll taxes. It might not be necessary if you don't have employees. You will have to, file any corporate or any partnership returns associated with that. If you're a disregarded member, let's call it, that's a proper term. Meaning you're one person LLC. If you have an S corporation, you will have to file a corporate tax return. So it might make your accounting work more expensive because you're going to get a K-1, and that K-1 goes to your individual return. And then you have to do your state filings, and you can't avoid payroll taxes. So if you have a profit, you may have to assign yourself a salary, which means that you have to file your quarterly payroll taxes. So the accounting is more expensive, if you will, on an S corporation. But there are benefits to the S corporation in that, there are certain items that you will be deducting, and you have certain protections. So, and then with the C corporation, that's really for people who either are not U.S. citizens, as I mentioned before, and or they plan on having a big entity, if you will, down the line. And that is subject to double taxation. So really small businesses, we never recommend a C Corp because you'll be subject to double taxation, meaning you'll pay taxes at the corporate level, and then you're also going to pay with your individual taxes.
Jesus.
So really, every one of these things is treated on a case-to-case basis. When we meet with a client, we try to understand their needs, and from their needs, we'll suggest to them, okay, I think you should probably form this. I think you should probably do that. So there's a bunch of scenarios. One of the more common ones that we get is, two people going in business together. When it's two people going in business together, we recommend an LLC, and they form a partnership. So they'll be subject to a 1065 return. We do the partnership return and issue the K-1s, and, they'll pick it up on their individual return. So it really just sort of depends on the individual's needs at that moment.
I think it's good. I'm happy that you said that, because I think it's good to know that people can just walk in, tell you their scenario, you can help point them in the right direction.
Yeah.
Because like we were talking about before, as far as going on to LegalZoom and just find the first thing that you see, and then find out later on it was a costly mistake.
Yeah, it can be.
So it's good to know that people can come into you. You can help point them in the right direction. So before we let you go, Jorge, and I want to say thank you so much for coming on, because if you ain't changed anybody else's life, you definitely changed Alyssa's right now, because she learned so much.
Every time you speak, I'm like, taking it all in, and I'll definitely be sitting in Jorge's office. So
absolutely. So I'm happy you said. So with that being said, Jorge, where can people find you if they want to get their taxes done with you? Just want to ask you a few questions. Where can they find you?
Very easy. Type it on Google, Kyle Lester CPA, and it'll be redirected to Kyle Lester CPA PC. And Kyle is the head honcho, as I refer to him. He's also an attorney specializing in estates and trusts and real estate transactions. We are based out of New York, so we are located in Melville, New York, and that's really the easiest way. And we're very responsive. So you'll be dealing with highly qualified people. Kyle has over 40 years experience on the field, and I have over 10 myself. So qualified people, and we'll do our best to make sure that you're taken care of.
Absolutely. Just so for the people watching, just so they know, I've been calling them for the last 3 years with questions all the time. Like, hey, just by the way, what do you think about this? Just to get your guys' thoughts. And we're definitely going to have the website in the
Well,
notes.
we do the same with you because our tax software is not the easiest to navigate. So a lot of times we're like,
Yes.
well, let's call Andy. Let's see what he says about this tax software.
That is a whole nother story. But yeah, this was fun. Thank you so much for coming out.
Thanks, Jorge.
Yes,
It was
Jorge. Thank you so
great.
much. This was a blast.
Absolutely, guys. Anytime.